Hey everybody, welcome to week 57 of the Ag Commodity Corner Plus podcast. And today is the 8th of May 2026. Mo, it was a big day, big week rather, for the markets. What are we focusing on?
Well, we had $5 corn, $12 beans, $7 wheat, and $7.50 canola. So, what do you think? Top in, party over? Give me your comments. Let me know what you think in the YouTube comments. Okay, let's get started. Here's our summary quote chart to start this podcast. I highlighted soybeans because we were actually up 5 cents for the week, which was a good close considering the volatility midweek. Back above 12. CME lean hogs remain weak. We'll talk about that at the end. New low there for June. New weekly low. Cattle, mixed results this week. Some stories were weighing on cattle, although we had record cash up to $260 per carcass in the north in the U.S. S&P 500, NASDAQ, both at new record highs. Dow is lagging, and Bitcoin finally broke above 80,000 for the week. So that's also acting a little bit better. So let's start off with this $5 corn.
Start off with what's been happening in the markets. Many in the trade are saying that lower crude equals lower grains, and the top is in for the grains market with the funds at near record long grains. But we believe that crude oil will remain sticky and the downside is limited in the grains until more is known about acres from higher fertilizer prices, production, yield, weather, and Chinese demand. All these are catalysts. All grain futures remain in a bullish uptrend channel, and a correction at any point, like we've seen recently, is healthy. Mo.
So last week we suggested in real time that the funds were going to be record long, over 1 million contracts, and that's exactly what happened. As of May 5th, they're long 1,042,000 contracts, but in real time, they sold off some of that, risk off. They were a little bit risk off this week, and so you can see from this corn chart, there's a common trend amongst all of these grains. This is your bullish channel uptrend that you started a few months ago. Actually, you can say that you started it from the beginning of 26. And when you go up like this, sometimes the funds will hit the upper end of the channel. They'll stop buying. They'll correct lower, maybe take some profits. Then they'll trade it to the lower end of the band, stop trading, take some profits as they maybe shorted it. And then they resume the uptrend, and you did that again this week. So hopefully you guys are not panicking, because you don't need to panic yet. And I think the next leg higher is to new highs. Same thing with this is November beans. You can see the bullish upward channel remains intact. This is Kansas City wheat. Everybody's saying the top's in on Kansas City. I don't think so. We'll get into that a little bit later. And then this is November canola new crop, again within that bullish channel. And then finally, crude. Again, I don't think crude's going to fall $20 in one day. I don't know. We'll see. Maybe that could happen. Again, for those who did not book their diesel or 26 fertilizer, don't go chasing 27. Everybody's trying to put fear in your eyes. Oh, a food shortage and fertilizer is going to get expensive. I'll make a bet with everybody on this podcast that a year from now, both fertilizer and diesel are going to be trading much lower. And I'm going to remind you a year from now when we do a podcast. So this stuff will come back to earth. Even the CEO of Nutrient said, oh, I'm worried about 27 fertilizer prices. In fact, urea, FOB, which we've talked about before, and I don't have a chart for you, but it's down 15.7%. So, just remain patient. Just ignore the noise.
Next week is shaping up to be a big one, Mo. We have the USDA May Day, which normally features the new crop estimates, especially for the U.S. crop, and trade estimates for the new crop. For corn, 26-27 yield, trade is expecting it to be 182.8 bushels per acre versus the last year at 186.5. Soybeans expected to be similar to last year at 53 BPA. And some of the highlights from the trade estimates are that trade is expecting the Brazilian corn crop production at 133.5, and The U.S. corn ending stocks, as you guys can see there, coming in at 2.13 versus the prior year at similar levels. That is for 25-26. And also the big one, as far as wheat is concerned, HRW wheat production expected to be lower by 165 million bushels to 640 million bushels. Well, what are your thoughts on that? And are they on the higher side, Mo?
So the yield here at 182.8, everybody was thinking 183. So just a rounding, but that's your trend line yield, slightly lower than the record from last year at 186. I think these two numbers here, the ending stocks for old and new crop corn, are coming in too high. So remember, exports are red hot. We've talked about this in past podcasts. We're up 29% compared to last year. USDA is too low by 385 million. So I'm thinking with 4 months left, USDA has to increase corn exports. Let's call it 100 million. They're running out of time. I think the trade with this number here, this 2.13, could be suggesting that they offset that 100 million higher number on exports with lower ethanol feed. I disagree. I'm not going to get into why. And so I think this number could be closer to 2 billion. That means this number could be closer to 1.8, which will drive corn higher. In terms of wheat, you can see old crop ending stocks are dropping from 938 to 820. That's because of HRW. It's in trouble. This could surprise to the downside. And you can see here from this chart this is the global numbers. They're going to come in slightly lower because of some lower U.S. numbers. And then, of course, with Brazil, this is too early, but that second safrinha corn crop in the north, in that central part, is dry. Some are thinking that we've lost as much as 8 to 9 million metric tons. It's too early for the USDA to do that, so I'm surprised that this number is going up. But it could also surprise with a flat number there. And then finally, HRW winter wheat crop. You can see here down 164 million. This one could surprise to the downside as well, which could ignite that Kansas City wheat futures. And that's one reason why I don't think the top's in just yet. Don't forget, if you want to win, if you want to make money, sign up to our program. That's all we're doing is winning. I'm winning just like Trump. I can't stand the winning. I mean, actually, we're winning too much. Anyways, we're definitely doing the Trump dance. I'm not going to stand up and do the Trump dance, but anyway, let's move on to Oklahoma.
Yeah, let's focus a little on that HRW wheat crop. A wheat tour in Oklahoma reduced production estimates for the state by about 50%. And the tour, at the end of the tour, they said that it possibly is the worst since 2014. For all we know, it could be the worst ever. If you look at the latest USDA crop progress numbers, and for the top 5 HRW US states, the weighted poor to very poor average rose to 49.7%. and versus 48.6 the prior week. And this compares to the worst crop ever, HRW crop ever, from 2023 when the PVP percentage was 57%. And zoning in on Colorado, the good to excellent numbers were down by about 3% for the week at a record low of 5%. And the poor to very poor also was a record at 67%. And looking ahead to next week, we have the Kansas Wheat Council tour, which could provide a better picture of what we've been hearing otherwise. Well, what's your intel from talking to farmers in U.S. HRW
I
wheat
think,
country?
but we're going to remember 2026 is the year of HRW wheat. It's about lower yields. It's about expanding drought, and it's about abandoned acres. That's the wild card. Farmers that we know, clients of ours, members of our program, have suggested that there's farmers in Montana, 50,000 acres, have to abandon 30,000 acres. They sprayed it out. They're not going to plant anything behind it because it's so dry. We know of guys with, these are harvest cutters that typically the companies, custom combine companies that own 15 combines or the sort, and they usually go down to Texas to harvest the wheat crop. They're ignoring Texas. I didn't pull it up, but there's so much disease in the Texas wheat crop. It's not funny. It's in 12 counties. So I think the market's underestimating the damage that's been done from drought, disease, frost. It's dead. We don't have 9 lives anymore. The rains are too late. I would not be surprised if this Wheat Quality Council tour shows that the Kansas crop has been cut in half as well. And so we'll have to wait till next week.
Let's talk about cattle. And again, there's some concern as far as the U.S. cattle industry is concerned, owing to importing Brazilian beef again. So Brazilian beef exports during the first 3 months of the year were about 795 million USD, and this was up by about 21% year on year. For the whole of 2025, exports, or rather imports into the US from Brazil amounted to about 1.75 million, up by about 39% year on year. And all of this has weighed on cattle futures, but the offsetting feature could possibly be cutouts, which are higher, and cash.
Cash hit 260 in the north. It's offset some of that. We did close a little bit lower, but again, I think this whole Brazilian beef thing, that we've talked about this before. It's been headline news. It's just more noise. Is it more important than importing or reopening the border with Mexico? Yes, because we imported a little bit of beef. What was it? Hamburger beef from somewhere else. I think was it Venezuela or something like that. But it amounted to a very small amount, less than 1% of the total beef imports or beef production in the United States. So this one's a little bit bigger, and yeah, it could probably do some damage. But as long as we're above 220 on live cattle, it's a bull market. Period. That's it. That's all you need to know.
Let's talk about what's really been running the financial markets over the last week. And stock markets have been on a tear higher. The S&P 500 up by about 17%, NASDAQ up by about 27% since the end of March. And as for today, or rather the S&P 500 has added about $10 trillion in 29 days, owing to semiconductor stocks, AI stocks, which are all surging 100%, by about 100% in recent weeks. And all of this is owing to upbeat earnings and the potential for further growth.
This is the S&P 500 up 17% in just over a month. So this is at the end of March. NASDAQ up 28%. Are you kidding me? So get this, in 3 years, NVIDIA's up 2,500, and we've shown these charts before. AMD's up 700%. MU, which makes the memory chips, so if you don't have the memory chip, you can't run a GPU from NVIDIA, is up 1,000% in 1 year. Intel, I missed this one. I don't know, for some reason, CPUs are on fire again. Not only are GPUs on fire, but CPUs are up, and it's up 600%. And then SanDisk, another one of those memory chip companies, up 4,000%. AI is a 15-year super cycle. That SanDisk, if you put $25,000 in at the beginning, well, within the last year, it'd be worth $1 million. Are you kidding me? Wow. Look, there's a lot of FOMO going on, fear of missing out. We're in the sweet spot. We get corrections along the way. Remember, because of the war in Iran, NASDAQ fell 8% and then rallied 28%. So you got to be fully invested. That's why we talk about play the long game, not the short game. Wow. Just amazing.
And NVIDIA reports on the 20th, Mo. That's something to look forward to.
Yep.
Let's look at the other major event for next week besides the USDA WASDE, and that is the Trump-Z Summit, which would happen towards 14th and 15th, I believe, of May. And the US-China trade deal at the end of next week will move the demand needle as far as grains are concerned and ag is concerned. And this could be a game changer for the next 2 months and 2 years. And it'll take over driving the bus higher in grain prices. So far, crude oil's been doing that. It could switch over to this Trump-Z Summit. Mo, what are you hearing ahead of this meeting?
We've been hanging our hat on this meeting forever. It's finally here. There's so many people that still think it's not going to happen or it's a 50-50 chance. Look, There's 5 senators in Beijing right now as we speak, talking to all the trade reps. Why did, maybe anything's possible. Maybe we could get canceled last minute. But the first meeting in October was about soybeans. This meeting's about soybeans plus. The plus means cotton has a seat at the table. Beef has a seat at the table. I'm not sure beef is going to amount to much because U.S. unfortunately doesn't have the available supply. But nonetheless, that would be positive. So look, guys, if you go back to phase 1, 2020, China is the big gorilla in the room. It's going to make a huge difference. So if you're worried that maybe there's a little bit of a top, maybe the party's over because the funds are too long, this could change that. So you need to wait for this. And could we come out of it with some disappointing news? Anything's possible. But both leaders need a win. I wouldn't be surprised if Xi's telling Iran and Trump to finish this war before Trump comes to China. I wouldn't be surprised if Xi's telling Trump, look, you can come, I'll give you what you want, but you got to end this war. And so at the end of the day, this is a game changer. I hope you haven't panicked. I hope you didn't pull the trigger too hard, because soybean futures could be $2 higher after this meeting. What if next week we get goodwill purchases like last time, where China buys 2 million metric tons of old crop beans and 2 million metric tons of new crop? What do you think is going to happen to soybean price? What do you think the funds are going to do? We're going to have fireworks, and we're going to win again. That's all I want to do is win. Let's finish. Well, let's do CFTC, and then we'll finish with hogs.
Yep. So the latest CFTC update, which came out today, shows buying in corn and soybeans and canola and cotton. So corn up by about almost 80,000 contracts week on week to net length of 343,925. Soybeans up over 36,000 contracts, net long 221,617. In canola, we are up week on week by over 6,000 contracts, currently at 89,108. Cotton as well, up over 12,000 contracts and at 51,184 net long. Buying in wheat as well, whereas HRW and HRS, there was net buying, but SRW saw week-on-week selling.
So the net long across the complex, this includes canola, cotton, 1,042,000 contracts. We said 1 million last week in real time. In real time, I think the funds midweek were selling. So they were buying on Monday, selling midweek, bought on Friday. My guess is they're long about 932,000 contracts. With a positive Trump-Xi meeting, the end of this coming week into next week, we think the funds will go record long. 1.1 to 1.5 million contracts at some point over the next 30 to 45 days. What about hogs, Abhinesh?
Let's finish off with what's happening in the hog/pork market. As of late April, the USDA Animal and Plant Health Inspection Service confirmed cases of pseudorabies in a small commercial swine facility in Iowa, which traces to animals received recently from a herd in Texas. These were 5 boars from Texas and an isolated incident. This is the first commercial outbreak of this disease since 2004, because post-2004 outbreak, it was said that this was eradicated. Mexico is looking at restricting U.S. pork variety meat imports due to the cases of pseudorabies in Iowa. More, are we oversold on hog futures near term?
There's no question. I think I'm surprised that the number one buyer of U.S. pork, Mexico, is doing this ahead of trade negotiations with the USMCA and all that fun stuff. But hey, politics again. This is ridiculous. Exports were acting. Actually, exports just came out this week. U.S. Meat Federation, and they were record strong. So. This is a disappointment if this happens, but I think it's still more noise than bite, more bark than bite, I guess, just like Trump sometimes. But anyways, I think long-term seasonality. The problem with seasonality is it's remained cold. Maybe we get some warmth after Mother's Day weekend, but both the cash and cutout have lagged. And so I think the funds are taking a wait-and-see attitude. I think we're carving out a low, but it's been a disappointment because we had an early high near that 110, 112. And when the market should be taking off, which is this time of the year, it's actually moving lower. But I'm not concerned. It's oversold, and I think we'll still. What I'm hearing, if you want some intel, is that if there is a hole because of disease, mostly not because of pseudorabies, but because of PRRS, you're talking maybe late July, August, and some are thinking, the trade's thinking that October hogs, currently in that 88, 89, could trade to triple digits, 100 plus. So there you go. Thanks for watching. Appreciate it. Have a great weekend. Take care.
Bye,
Safe
guys.
planting.